It's just about tax time, and we need to know how much income we've actually made that we have to report on our taxes. So let's start by identifying the problem. First, we need to know how much actual income we made. Principal is money you have before the deal begins. The interest and fees are going to be your profit, and those are the numbers that we need to know so that we can report that as income on our taxes. There's another type of income that's a little more subtle. If we acquired an asset at $200,000 and created a note with that asset for $300,000, baked into the principal of that note is $100,000 of profit. As payments come back on the loan, a portion of the principal of the payment is actually profit. The name for that profit is discount earned, and its counterpart is the cost basis. It's important to note that when you are investing in an asset that you intend to sell, the money that you're spending is neither a personal nor a business expense for your tax purposes. These funds are considered capital improvements and are not tax deductible. In Moneylender, on our lender settings, we can set what the cost basis is. Moneylender can then calculate of the principal you receive from the borrower, how much of that is your cost basis and how much is the discount being earned. This discount earned is then reported alongside the interest and fees on your income statement. As the counterpoint to the income, you also have expenses related to your loans. Expenses you might record on the Expenses tab could include anything from attorney's fees, accounting fees, or postage, or appraisal fees. It's very common that you will also record an expense as a fee on the loan. For example, your loan contract probably says that the borrower is responsible for paying the lender's attorney fees when it comes to collecting on the debt. In that case, you would record on the Expenses tab the attorney fees you pay, and you would also add a fee to the loan that becomes collectible from the borrower for this same amount, essentially passing forward that expense. Another type of expense you might have with lending is charge-offs or write-offs. When you take money or assets from your pocket and you loan them to someone, and they repay until they stop, and you decide to walk away from the deal. You decide it's not worth the effort to attempt to collect on a bad debt. In that case, you now charge off the principal. Moneylender will also make sure not to charge off more than the lender's cost basis. Moneylender has up to 3 extension accounts that you can use to separately track fee-like collections. Whether or not those numbers should be considered income is up to you. Be sure you don't commingle extension accounts, like on one loan, don't use extension account 1 for taxable numbers, but then use extension account 1 for non-taxable numbers on loan 2. If you're using extension accounts and you need those numbers for your tax statement, it's a good idea to add those as extra columns on your profit and loss report. To do that, you just go to Reports, Customize, choose the Profit and Loss Report, click on the pencil to edit it, click on the plus button to add a column. For the column heading, we might describe what that expense is, perhaps sales tax. We'll choose the extension account 1 paid for the record value, and then click Add to make that the column value. Make sure it's right aligned with totals at the bottom and has a currency value. Then we click Done and we click Save, and now this column is available on our profit and loss. An important note is that when you get a payment from the borrower, Moneylender is tracking essentially 2 separate accounting structures. You might receive a payment on December 28th, and when you report numbers to the borrower, those numbers will show that payment on December 28th. However, for the loan to calculate properly, that payment may not apply to the loan until January 1st. And on your accounts, Moneylender will always use these applied dates for payments that are held to an upcoming due date. Don't be surprised if the numbers on a payment distribution for the previous calendar year do not exactly match the numbers for the profit and loss report for that same loan for the previous calendar year. It's quite possible that payments from December of the previous year are applying to your accounts in January, and that payments from December of this year are going to apply to your accounts in January of next year. Moneylender will make sure that nothing falls through the cracks. If you notice a discrepancy between the payment distribution report and the profit and loss report, this is the effect that you're seeing. Any financial activity in an escrow account, including the monies that you collect and deposit to those accounts, are not on your books. That is borrower money that you are holding for them. It does not belong to you. It is not income. It is not expenses. Moneylender will account for that. You can audit that. You can reconcile that using Moneylender, but it does not belong on your corporate or personal income tax return. Now that we're all set up, we know what numbers we need to generate our income and expenses for the entire year. We simply run the profit and loss report for the previous calendar year, choose a specific lender, and click refresh. The total of interest, fees, and potentially extension accounts become our income. We may need to add our discount earned on top of that in another step. The total of expenses and charge-offs are our expenses. To find the discount earned for anything you sold at a markup based on your cost basis on the loan, go to Reports, Investor Report. Choose the previous calendar year, select a specific lender, and click Refresh. The discount earned column is the portion of the principal you collected that should be considered income. Add this to the interest, fees, and potentially extension accounts to get the total income for the year. Subtract the expenses and charge-offs, and you have the net profit for the year. To create supporting documents, you have the profit and loss report already, as well as the investor report. To substantiate the individual expense numbers, you can run Portfolio Expense Detail Report and run that for the previous calendar year. That will give you an itemized list of every expense transaction incurred for the year. Now that you know, it should be a piece of cake to get your taxes filed this year. Thanks for watching, and thanks for choosing Moneylender Professional.